Hello, everyone. Welcome to episode 58 of Going Live with Good Soil with Matt and I here. Just a reminder for those on YouTube, you see a disclaimer, but for those on Twitter Spaces, these are always, not investment advice. We're just giving our opinions on things. So especially important in this episode, I think we'll be talking a good amount about Lemonade stock, for example. So we're not recommending people buy or sell any particular stocks or options. We're just talking about what our feelings are and our opinions are personally on these things. So, man, how are you doing, man? We were in Austin last week. It was fun. It was super hot down there. We'll get into that in a minute. I guess the Tesla Annual Meeting. But yeah, how's your morning going? What are your thoughts about the macro market right now?
Good, thanks. Yeah, it was definitely great seeing everybody last week. But yeah, macro. I mean, the big number is it is tomorrow. We got CPI print tomorrow morning, and so I think that's gonna. There's a little bit of skittishness. It looks like in the markets the last 2 days. Well, Friday too, actually. So it'll be kind of curious to see, whether that's a good or a bad number, or just kind of in line with expectations. I kind of feel like we'll have some volatility tomorrow, one way or another.
Yeah,
But
the CPI print is scheduled to be released before the open tomorrow. And then I think the PPI on Thursday or something, but the CPI is really the big one everyone focuses on. And I think we said last week or the week before, the Cleveland Fed is estimating it to be much lower, revising it downwards. So I think that's part of the reason the market the last couple of weeks has kind of rallied, maybe because they've realized that the CPI for July is going to be much lower than it was for June. But the Fed is still talking very tough on interest rates, right? I mean, all these Fed officials are in these conferences or interviews saying like, yeah, I don't know what the market's doing. We're going to raise rates or something. They're trying to like scare the market down. And, I guess really it's about the long-term interest rate or medium-term interest rates. At the beginning of 2023, are interest rates really coming down? Or are they going to be at a higher level, 3% plus for a sustained amount of time, I guess? And that's what the macro market's trying to figure out in my opinion. And we're kind of in this gray area right now where maybe it's where there's a turn of momentum in medium to long-term interest rates, but maybe not. So what CPI? What do you know? What the expected CPI print is for tomorrow, by any chance, Matt? I mean,
so I don't. I've seen a couple individual estimates. I think was it Bank of America had lowered
yeah,
their estimate from 1.9% to I think it was like 0.1%, or maybe it was 0.2%. So that was a
wow,
huge downward revision
huge,
that came out
yeah.
last week. I saw it wasn't the Cleveland Fed, but one of the other Fed groups revised their estimate down recently as well. But I'm not sure. I don't have the Bloomberg terminal to see what the kind of aggregated market estimate is. But I'd be curious to know that, though.
Yeah, if anyone in the comment section has a aggregate estimate, please put it in. We'll talk about it. But yeah, I mean, the stock market reaction, like one way or another, like you said, meant the stock market reaction is the most important thing to pay attention to here. I think just to understand where the sentiment is around, the macro markets. Is the pendulum swinging back, or is this kind of a bear market rally we've just been in the last few weeks? So my prediction is that, very short term, even if the CPI is like really good or something, or I wonder if like the market could crash quickly, like 5% just because of uncertainty, and then within a day or two be back off to a new rally. But like initially people freak out no matter what, almost, because it's like, oh my gosh, we didn't expect the CPI to be so low. What do we do now? And it's just sell, let's figure it out. And until we figure it out, and then there's like a little bit of a crash, and then we're off to stabilization or rally from there. That's one scenario I feel like could play out, kind of like, it fools all of us, because a lot of people will see the CPI being so low, but that's good news, and they'll buy, and then the market crashes, and we're like, I don't know what's going on, and then it fools us, and it just seems like that's one potential scenario to play out. But these things are so hard to predict. Short-term movements and macro market short-term movements, that's like really difficult. So
Yeah, I mean, we're not going to win. I think trying to time every single one of these things and trying to have better insights on where inflation is going to be. So, I think our worldview is just, to try to focus on the fundamentals of the companies that we're invested in, and then, hedge along the way with some kind of macro, kind of hedging instruments. So that's what, we've done. But everyone, obviously, that's not investment advice. And it's just one way you can kind of handle it if you've got a decent amount of long exposure, is to have a little bit of short exposure to the macro things that are going on.
Yeah.
So SC Talks with Andy says in the comments, you were asking about the CPI estimates. Looks like 8.7% year over year. I think the way that I had normally seen that is kind of like the sequential increase. So I think if you were looking at the month over month rather than the year over year number, it would be a lot smaller. So I don't know. That's kind of the figure I'd be interested in seeing. But
so don't you just divide that by 12 to get the month over month? So it would be like 8% or something like that, 0.75% or something.
Well, no, because if it was if I'm understanding this right, that'd be the July 22 over the July 21 instead of the July 22 over June 22. So
I see.
Yeah, I mean, I think the latter is like we're looking for like a flattening, right, or like inflation not getting worse, and so I think the sequential
month over month.
So there we go. Andy says in the comments 0.2 month over month. So that is certainly a decrease from what we've been seeing. So if we got 0.1 or close to zero,
What was negative? What was negative? That would really be weird, right? That would be wild. Be like, we're in deflation. Everyone, run for the hills. We don't know what
pull
to
out
do.
the confetti. Well, I think there's probably it's probably fair that there will be a difference between like the core CPI, which excludes I think it's housing and energy costs, and that it's possible there could be. Again, I haven't seen the numbers on this, but we've seen commodity prices in those sectors, well, in energy in particular, decrease a bit. So that could be a sequential decrease, but the core inflation is probably the more important one, and I think that's. Modestly up month over month to be what I'm expecting.
Yeah.
But yeah, if that was negative, I feel like that'd be really good news. That would probably be off to the races.
But I feel like the market would panic and not know what to make of it and just like sell off, and we'd be like, we don't know how deep the sell off would be. I don't know. The market just like panics.
I'd have a hard time.
A lot of times.
I'd have a very hard time thinking that would be a negative for stock prices. I think that would be very, very bullish signal. But I don't know.
I think medium to long term it would be, but like in one day, you just don't know what's going to happen. The market. People just don't want. They don't like what's unexpected happen. I don't know. I just feel like the macro market in an intraday and like trading environment responds negatively to anything super unexpected. Usually, the macro market. Individual stocks will respond in a correlated way to something unexpected, whether it's a positive or negative. But I feel like whether it's positive or negative, it's unexpected. Sometimes the macro market just seems to drop no matter what until it figures out how to make
we have seen
remodel.
We've seen some crazy like 10-minute huge reversals, like when some of these have come out, or like when Jay Powell is speaking, it'll be like, down 0.5%, and then it rallies like plus 1% from there.
Yeah,
just like in a very short amount of time. So there is.
I think there's been times where it's gone down like 2%, then rallied 4%. Like a few months ago, or 6 months ago, there was one instance where it was down 2%, then it ended up the day like 3% or so, like a 5% swing just from 2 hours of talking or something. I don't know. So the market has to figure things out sometimes. So let's move on. I mean, Tesla, the annual shareholder meeting, we were there last week. We met a lot of great people. It was really a cool sense of community. I feel like this annual meeting is going to be a really incredible thing going forward. Even this year it was a big deal, but like going forward, it's going to be a bigger and bigger deal. And, this is going to be like an annual pilgrimage, or, it's just going to be insane going forward. I think these annual shareholder meetings meet, in Austin. It's going to be like everyone from all over the world are going to just congregate in Austin, and it's going to be like a big. That's what I'm thinking. Like 2 or 3 years from now, it's going to be so big, and like imagine by the end of the decade, it's going to be ginormous. It's just, what did you think about the meetup, Matt?
Yeah, kind of same. I mean, on the surface, like from a strategic perspective, I mean, there was really no important news. There was not a whole lot of, frankly, reason to be down there other than just to really connect with the Tesla community. It was actually my first Tesla event. So my first time, meeting a lot of people down there. I see Larry and Farzad are in the comments. It was great seeing you guys both last week.
Yeah, great seeing both of you. Yeah.
But the thing that stuck out to me is like there's all these great people, and you see them on Twitter, and just give kind of great vibes online. But when you meet them in person and just kind of hear the stories of how Tesla has changed their lives or has changed their families' lives. I mean, there were stories of like a family business being saved by a Tesla investment, like right in the throes of the COVID shutdown,
Yeah.
which was killing just so many inspiring stories and so many people who kind of went all in the face of a lot of adversity and people just telling them they were dumb and crazy, and so just was really it made a bigger impact than I was expecting to hear all these stories and just meet all these people. But I agree with you. I kind of got the feeling there were so many people that were just so excited to be there, and we're definitely planning on going back again the next year. And I definitely do get the vibe that this is gonna grow over time to be something a lot bigger than it is in its current form. So I'm excited to see how it changes over time.
Yeah, really a great like fellowship with Tesla investors. Just it reminds me of like if you ever gone to like a Fish Head concert, or for the band Fish, or what Deadheads, Grateful Dead fans probably used to experience when they went to Deadhead concerts, or if you ever have been part of any 12-step programs or know anyone, like there's this fellowship instantly, even though you don't know anyone personally, you get to this big gathering and everyone just instantly disarms and is friendly with each other and like knows they're all in common, like on this mission of like enjoying something or being part of like Tesla in this case, and it's really nice, just it's refreshing to go there. And you and I are quasi well known, not as big as like Rob or others. I'm try to ask Steve, Mark, Ryan, he should go. But yeah, if you're like one of those YouTuber, Dave Lee, if one of them go, it's like a whole nother thing. But even for you and I, it was like crazy, just everyone recognizing, a lot of people recognizing us. But even if you're just a normal person, I think going is just an amazing experience because everyone there, is like-minded like you in terms of Tesla. And you can it's an instant conversation piece that both of you want to talk about. And, it just makes it a fun time. So yeah, I'm looking forward to the next couple of years.
Yeah, so an interesting theme is developing. Emmett, you were surprised in January when you met me in person that I was so tall. Farzad and Larry, who I met last week, they're both saying they couldn't believe how tall I was in person, which I'm not even like I'm 6 feet. I'm not particularly
No,
tall.
you're like
But that's
6'2", I think. You're like 6'2" or something.
I am definitely not.
I'm like 5'11", and you're a little taller than me. So either I'm lying to myself or you're wearing like platform shoes. I don't know. But you're taller.
No,
So
it's funny though, the kind of instant camaraderie and stuff. I was kind of telling my wife about it and how people would just kind of come up and be like, "Oh, like I listened to your videos and it was like so like what a pleasure to meet you and like can't believe I'm talking to you." And like I was telling my wife about that and she just started cracking up because I'm just like the boring dad at home, and it's like there's this whole other community out there. It's just it's such an awesome group of people. And I was talking to Rob Maurer about it a little bit, and he's got it like on steroids, but he's saying it was very healthy for him to just be like a normal guy in Milwaukee 99% of the time. And every once in a while, he's like, Elvis or something, who just gets mobbed by people.
Yeah. I know. And then the stock really ran up into the annual meeting. It was like a fun, everyone's all excited. The stock's going up, and then Friday comes and it just tanks like $80. And, it was like, what happened? The winds came out of, and it's just like a little bit of a downer to end the trip traveling back when the stock's down. So whatever. I mean, the stock's not whether I want it to influence my mood or not, it does. I'm looking at it every day, right? So it theoretically it shouldn't. We're all long-term minded for Tesla. We know where it's going in the long term, but on a given day when you see it go down 8 or 10%, it's it's a little nerve-wracking for that day, but
I
it
thought.
just, do you think Elon was selling shares? I mean, I
No,
think
so
there's a
that
small possibility.
he would have had to disclose it by now. So that was what I was thinking when it was just falling like steadily throughout the day. I mean, that was a very similar pattern to what we saw when he sold for the first time. So I was thinking, oh no, like, annual meeting ends and Elon's just, selling to free up some liquidity for the Twitter deal. But just this morning, Gary Black tweeted that, he would have had to report it by yesterday, I think it was, if he had sold. So the fact that he hasn't, I think we can
saw
rule that
that.
off the table.
But you have to second guess Gary Black sometimes. You have to find out where he's getting his assumptions from. right? So I see that. I'm like, yeah, he's probably right, but I'm not 100%. And then Future Investor, a guy I met in person a while back, tweeted something. I retweeted it just like 10 minutes ago before we got on here, I guess. So you probably didn't see it. But Elon could have sold Friday and the form for would be tonight because based on previous, he shows images from the previous ones from April 26th to April 28th. So if it's 2 business days after. So I'm not sure. Some people might interpret like Friday is the first business day, Monday is the second, but it might be Monday, then Tuesday, the second business. So I think it seems like there's a chance if he did sell Friday, it wouldn't come out until tonight. So that's what I'm saying. It's not, I don't think it's likely,
Yeah,
but I think it's still possible. Sometimes Gary Black tweets on this, it's not definitely true what he tweets, but he gives a lot of great insight. So I think it's still possible he might have sold on Friday and even potentially yesterday. The stock went down at the end of the day. Why? Right? Why did it drop so
yeah,
much? So it's possible if he did. I think people are saying, like, reacting in the tweet, like, oh, that would be so disheartening if he sold more shares. Actually, I think it would be bullish. I think it would be great, like, news, like, for the Tesla stock. Like, you might be like disheartened that Elon had to sell more of his shares. For him personally, it's disheartening. But I think for as an investor in Tesla, you'd be happy that it's over with. That, like, okay, now he's not going to have to sell in the future. This means, although that's what I thought last time. But maybe some of his investors backed out, and he wants to get more shares so that he can just buy it up without borrowing margin to finance Twitter or whatever. So we're talking about, but I still think it's like a 10 to 25% chance. It's enough to think about, but I still think it's a low probability.
yeah. And I mean, it could remove a negative catalyst, right? If now he has enough cash to just handle the deal, even at the full price, that you could definitely interpret that as a positive sign. Although I'm not sure the
Yeah,
market would in the short term, to be honest with you. But then it's just like you look at what's ahead, and we've got investment grade rating most likely, coming out in the next month or two, hopefully.
yeah,
Q3's, shaping up to be a pretty strong quarter by the China numbers that were kind of right in line with expectations, and now we know August and September will be a lot higher since there's not going to be the significant downtime that we had in July.
yeah,
And so I like, it just seems like in AI day, like let's not sleep on that.
yeah,
I'm skeptical that it really will be like a stock price catalyst, but I could, if there's something very amazing that rolls out, it wouldn't surprise me if they've got something that really just kind of blows expectations away. I mean, that's one thing I think people are sleeping on is Tesla's AI capabilities. So if they have
yeah.
something more advanced than what people are expecting, I think that potentially could be a catalyst. Although I would say that's less than 50% likely.
Yeah, for sure. Yeah. So we'll find out. I mean, if he did sell, I think he's in that window of time where he has discretion to sell shares of
Yeah,
Tesla. So this is like the last window until the next quarter where he has discretion to do it. So it would almost make sense the more I think about it. I'm more at like the 25% chance probability in my mind now. Just thinking about it. But there are lots of other catalysts. It would be a good thing. It would remove the overhang. It would mean like, okay, he's going to move forward. Let's get rid of that overhang of the Twitter, whether he has to sell more shares or not for it. It would, and there's lots of other catalysts, like you mentioned, AI Day Part 2 and investment upgrade. So to me, it would be very bullish if there was a form that came out tonight showing that he sold shares on Friday, because then it would likely mean there's a form that comes out tomorrow that he sold shares yesterday too, and maybe it's all done with or something. The amount of shares he needs to sell in order to have enough equity.
yeah. I think that the one reason I think that's probably not likely that he sold was David
Yeah.
Kasman reminded me in the comments that that Elon made a comment about the drops are buying opportunities.
Mm.
He said something to the effect of like buying the dip. It seemed that he had a very kind of bullish take on where the stock could be going from here. He's been known to drop little hints like that before, and I just think personally it's kind of against how he operates personally to make a comment
Mhm.
like that and then sell the next day.
Well, you could
So
interpret that like he might think that he has to sell if he
yeah,
doesn't want to have margin, and it could be a buying opportunity for the rest of us. That's what one way he could have been communicating, like, hey, all of you guys might get a buying opportunity soon or something. That's one way to interpret
yeah,
it, but I can see the interpretation you have too. So yeah, I mean, we don't fully agree on this. It's okay. Like, I think it's 25% probable, and you're more like probably very unlikely, so that's okay.
we're
What
not too far
percentage
off.
would you put it? What percentage would you put it at, Matt? I'm curious.
So
If you don't.
the percent chance that he sold on Friday.
Yeah, yeah, yeah.
Yeah, I think 25% sounds about right,
Oh,
actually.
okay.
So
All right,
I
good.
think
That's
we're pretty much on the same page.
okay. Okay. All right. Cool. All right. Well, Um, so let's move on to the next thing, I guess. What's on our list here? So Canada factory is coming up. Is there rumors of that? I mean, there's some like lobbying going on. I think that lobbying doesn't definitely mean that the Canada factory. I feel like it means that Canada is probably in the running for a gigafactory for sure. But there
Yeah.
could be Indonesia. There could be, behind the scenes, there could be like Brazil. There could be UK. There could be like 5 places. They're kind of like checking out all at once, and then they'll make their decision and announce it, later this year. Do you think Canada is
Yeah.
likely or?
I don't know about likely because it was Ontario, right? I think was the province that was discussed, and I think in the past Elon had made comments about an East Coast gigafactory, which does kind of make sense. I mean, you got West Coast, you've got Central U.S., and you've got
Mhm.
East Coast, and Ontario is not exactly East Coast, so I mean it's Easter, it's a little bit more east than Austin, but to
Mm,
me, I don't know. I was thinking something more like U.S. East Coast would make some sense.
mm.
But I don't know. I mean, things can clearly have changed, or things could clearly change, and it may very well make sense to have another a factory in Canada.
Yeah.
So I don't know. I could see it working, but I think my confidence level is low. I think another one in Larry wants North Carolina again. That could do.
Yeah.
Um, so I don't know. My confidence level is low, but I think I would be surprised if it was UK, even though there's been all the rumblings about that for years. I think something North America is most likely, toward
Yeah.
the East
Yeah.
Coast.
I see, just based on what we were talking about before with Elon selling, I saw a chat from Ishan Patel on YouTube, which is very interesting, and it's something I haven't thought of, that Larry Ellison might have sold, as he is no more required to file a Form 4. Yeah, he's off the board, and maybe he had to wait until, this window of time or get off the board to sell it without a Form 4 or something like that. So, yeah, maybe that's possible. Maybe Larry Ellison sold all his Tesla shares, and that could have dragged the stock down $80 and yesterday too. That's possible too. Anyway, Ontario isn't very descriptive. Ontario is 154.7% larger than Texas, according to Google results. That's from Boiled Down AH. Yeah, Ontario is very big. There's a lot of resources in Canada. Yeah, and Larry wants North Carolina. I think Brazil is still in low. Didn't he meet with Brazil's government a couple times? They also met with Indonesia's government. They did that big nickel deal. So there's a lot of options on the table
Yeah.
still.
I think Brazil's kind of bordering on political instability at the moment, so I think that's probably less likely right now.
Yeah.
Um,
Yeah.
it doesn't seem like there's a huge market for Tesla, at least right now in South America. So I'd be surprised if that's in the near term something
Yeah.
that would be done.
Yeah. I see Model World is saying, please talk about Optimus use cases. Yeah, he alluded to Optimus a little bit on the how people don't appreciate it in the shareholder meeting as well. We'll find out more. I think Optimus will learn a lot more. Matt and I are planning to have like a roundtable kind of discussion with a couple specialists on robotics and and potential UK use cases or designs for the Optimus in the next couple of weeks, and we'll release it on our channel, a recorded interview. I think last mile delivery is a big use case after the factory, obviously. We'll talk a lot about it, I'm sure, when we have that roundtable.
Yeah.
Yeah. And Elon's mood, he seems pretty good, and I guess let's get to the big thing is Lemonade, right? Lemonade. We'll go to more Q&A at the end as usual, and I'm sure we'll have lots of questions about Tesla still. But let's just pivot to Lemonade. This is a stock we've talked about on and off a lot. It's a big part of our fund, and it's not as big as Tesla by any means, but it's still significant, and we really like it. And the opportunity presents. People have to remember that it's like less than a 2 billion market. I guess today it's like closer to 2 billion market cap, but it's just tiny compared to Tesla. People are always like, "Well, Tesla insurance is going to make it obsolete," and I'm like, dude. Lemonade is for like the non-Teslas, okay? I mean, and if you took out Tesla, if you stripped apart Tesla's insurance, right, from Tesla and it spun out, it would probably be worth a heck of a lot more than $2 billion, right? And so, the potential for Tesla's insurance to go where it's going to go. I mean, I'm sure every bull would think that. So if Lemonade's for the non-Teslas and it's only 2 billion right now, what could it be worth later? Like that's the kind of, we have to think about the total addressable market compared to what the current market cap is. And you and I both look at it differently. Matt looks very close into the modeling and the the metrics, the in-force premium, the cost, all that stuff's very important. Like I trust other people for that stuff, and I trust Matt for that. I like to look at also things focused more on like not the story, but where I see a perspective of the stock or a company that other, it might be missed, but that can't be captured by the spreadsheets. And in that case,
Like
I
the
drew an
product. I mean,
analogy. The
that's how you
product,
got
yeah,
into Tesla was the product, and you've seen the same thing with
yeah.
Lemonade.
Yeah, I see something similar with Lemonade, the product and service. Like the way I describe it is like just because I come from a fintech background, working in interactive brokers for so many years, I've seen Robinhood become a baby to grow into an IPO stock, and I've seen interactive brokers grow from like a toddler to a full-grown adult company now, and I've seen E-Trade and other companies come and go. Fintech companies get bought up and consolidated, and what differentiated interactive brokers was its backbone technology that it built itself, the clearing technology, the connections to exchanges, all this stuff it had built entirely itself organically from the ground up. And a lot of the other electronic fintech firms, they're just piggybacking off of legacy providers, whether it's like Bank of America's clearing systems or some other like Dyno broker clearing system that can't be technologically manipulated very easily because it's just like this age-old system, but they're just like white labeling it to look like something cool. But they're just not flexible that way, and there's embedded costs in that. And so Lemonade, I see in insurance doing something similar to what interactive brokers did and building its own kind of backbone technology, except for the life insurance. I think they use some legacy provider. They kind of white brand on top of that. But other than life insurance, they've built out their own infrastructure from the ground up for all of its, insurance capabilities. And all the other insure tech plays, whether it's Hippo or some others, like they just kind of like white label legacy providers and try to make it look nice, but it's not flexible. And then the best thing about Lemonade, perhaps, that you combine that because, with Robinhood type interface of how like the user experience is so like incredible. People love using it. It's simple to use. It's great for young people. They just adapt to it quickly. Just the interface of Lemonade is very easy, very customer friendly, very intuitive. So that's one thing interactive brokers didn't have is the interface, but it still had the backbone technology. And then you had Robinhood, which had the interface, but it just had no backbone technology. It was just like piggybacking off of, I think, some other firms like Apex Clearing or something like that for a long time, and which many of these, small startup robo brokers did like for years, and it just didn't work out that well. So you have the combination in my mind of those two things, and it's just going to be it leads to what I think a huge market share potential for Lemonade in the future from a product perspective, if they can execute on controlling costs and not having to raise too much capital too soon and so forth. And and the metrics will follow, the customers will come in my mind. But Matt, what do you think? What do you see about you from your perspective? You see something different in Lemonade. You see it from a more of a modeling perspective and such. Tell me a little bit.
Yeah, well, I mean, so all those things that you described translate into future revenue, and so you got to look at those big picture items. But then where I kind of get lost in the numbers is looking at the trends over time. And so I think one of the most let me just start with digesting the earnings report a little bit for maybe those who aren't following as closely. It was something of a monster of an earnings report, at least as much as it can be for kind of like a pre-earnings company. But they beat on the top line and substantially on the bottom line as well, which was really great. They guided that this current quarter, so Q3, is going to be their quarter of peak losses, and then it'll be kind of decreasing from there. I suspect a lot of that is probably due to the Metro Mile acquisition, which is kind of integrating right now. And they're going to have kind of a lower loss ratio just because of that coming into the mix. But in terms of the number, I mean, revenue was up 77% year over year. So like talking about how hard it is for Tesla to grow, at 50%. Lemonade's growing. They're still so small that they can be growing at a much higher rate. But even sequentially, they grew 13%. So that was really encouraging. In terms of some of the guidance, they said that there's no new funding needed. And I think that was probably a big part of the reason that we're seeing this, plus 15% or so last I looked, move in the market today. But I think the thing that is most lost as most analysts look at this is the potential for bundling. And this is the first time I can recall that they've actually spoken about it on the call. But the kind of entry level customer that they've got is only buying like maybe pet or maybe renters insurance. And so a couple of years ago, it was like $190 of premium per customer per year, which is super small. I don't know about you, Emmett, but I'm paying, a lot more than a lot more than $190 a year for all my insurance
Yeah.
products
Oh
that I
yeah.
need.
Yep.
So, you think of like auto, and you think of home, and you think of life insurance. I mean, those are, 10x more opportunities. And this is something they said in the call that for their customers, which have all of their products, which I think there's 5 now, if I'm not mistaken. So the car, the home, the term life, the pet, those customers have about $3,000 per year of premium, as opposed to, the average is like $290, I think, right now. So a 10x opportunity in premium per customer, just due to bundling. And right now, like, the auto is not fully rolled out in all states. They've not done a whole lot of cross selling, and they're restrictive. Like, you were trying to get a quote for your house on Lemonade, and that you couldn't even get it
Yeah.
yet.
I couldn't get it.
So
Yeah.
they
California.
talked about how
They
they
mentioned in
were.
the letter they toned down California, right? They talked about it in the letter.
Yeah, exactly. So that was actually one of the things that I found really interesting. They're really throttling back their growth ambitions, which I
Mhm.
think is part of the reason that they don't need to do another capital raise. So they're targeting, those kind of higher growth, those most substantial, like, bang for the buck ideas that they have. And so then I think where people don't see the opportunity is just how much higher the in-force premium per customer can get from here. And so that's what I get really excited about, thinking of people in their, young 20s, just starting off and loving the product and sticking with the company over 10, 20 years. They're going to be spending a lot more. So I think you're going to see not only the
Yeah.
customer count increase, quite dramatically, but I think the premium per customer is going to increase quite dramatically as well. And so when you
Yeah.
multiply those together, it's just a crazy, crazy impact.
It's a similar parallel to Tesla in the fact that they're growing units of cars 50% per year, but the use of each car they're producing is going to grow exponentially, grow significantly as well with the full self-driving robotaxi network. So
Yeah.
even though they're increasing their products by 50, the amount of cars they sell 50% per year, the revenue is going to increase per car. The revenue per car is going to increase much more so because of the software robotaxi element on top of it. So it's a completely different industry, obviously. But Lemonade, in a way, they're increasing their customer account by, let's say, 60% or whatever, 50, 40% per year, 50% per year. But the amount of in-force premium per customer, because of the cross-selling and upselling and the maturity of seasoning of each of their customers over time, is also going up per customer more than 50% a year. Is sort of, so you compound that, it's like
Yeah.
125% per year in revenue increase, and operating leverage kicks in and all this stuff, right? So it's
Yeah,
a
I mean, it's
potential
not quite
monster.
that high. I mean, they're a little bit lower on both the in-force premium per customer growth and the customer growth, but
Yeah.
the point is definitely still valid. And I
Yeah.
think it's kind of similar to FSD in that the market doesn't give them any credit for it, right?
That's
Like,
right. Yeah.
they're still trading at just a slim premium to cash, even after today's move. And
Yeah.
so, like, I see this huge potential, and then we haven't even spoken about their AI capability, which, is, they had some really great things to say about that. But I think the
Yeah.
market is just saying, let's be skeptical of that, and, the proof will be in the pudding. And I think that's
Yeah.
fair, honestly. I mean, it's
Yeah.
easy to say you've got great AI, but I do think it's prudent to be skeptical of their AI, results at this point. But they had some really, really interesting
Yeah.
and optimistic things to say about that.
Yeah. And the other thing about Lemonade that I think is very interesting, that reminds me of Tesla back in like 2013, 2014, or even more recently, a little bit to 2018, 2019 or whatever, is the short squeeze potential. Like, I think I was looking it up before our chat just to be more, because I used to look at this like meticulously with Tesla for years. And NASDAQ publishes every 2 weeks the official like short interest of a stock, and it's like a week lag though of the actual. So the last reporting date they did was on July 29th, and that was as of the end of trading. I think because it's T+2 settlement for stock trading. So as of the end of trading for Wednesday, July 27th, and at that point in time, as of Wednesday, July 27th, it had 26.12% short interest, Lemonade, of the float. and that's when the stock price closed at $19.62. So,
Mhm.
that's pretty high short interest for a stock. 20 over 25%. That's I think Tesla was above 30% for a while, but even at 27% is pretty high. And the interesting thing is Nasdaq is publishing at the end of today the next metric, which is as of like a week ago's end of day trading or something. I forget which day it is. So we'll get another metric on Lemonade's more current short interest. So that I wonder if it spiked up. So if Nasdaq, if it went up from 26 to like 30% or 28% short interest between July 27th and August 4th or whatever, then that would be interesting. So we'll find out, I guess, in the next later today when I think it publishes the next metrics. So I'm keeping a close eye on the short interest and the short squeeze potential with Lemonade is basically what I'm saying. That's a nice bonus. I'll put lots of tweets with lemonade squeeze juice icons out there.
Yeah, I saw that tweet yesterday. That was nice, but I mean, it just spiked up immediately when that earnings report came out, but for good
Yeah.
reason. I mean, the thing that so impressed me was it wasn't like a one metric was better than expected. I mean, it was basically kind of all cylinders were going, and you're just seeing all the things that they've been talking about for years are just now
Yeah.
starting to kind of come to fruition. But at
Yeah.
the same time, we're still in like the very early innings of this. Like
Yeah.
they've built out this infrastructure that is like they're not going to need to like continue adding software engineers and that sort of thing at the same clip that they have been doing to build out this this infrastructure.
Yeah.
So I think it should scale very, very nicely when the revenues really start compounding. I think you're going to have a similar situation to Tesla again, where just kind of crazy revenue growth and linear OpEx growth.
Yeah. And I
Which
think
should like
they said their biggest loss would be Q3, and then it's going to
yeah
their losses will decline from there. So we're going to have I don't want to get the cart before the horse, or is it the saying? Yes, because the short squeeze might not happen yet. It might happen down the road if Tesla is. I mean, if Lemonade is to succeed, there would be a short squeeze at some point, but it might not be now. It could be down the road still, and the stock could capitulate it back down with the market or just in general. Because one thing I did notice, takeaway, I always look for things to be critical of too, and in the Lemonade, they went into great detail, given this analogy of like driving 60 miles an hour versus 50 miles an hour. If you're trying to get somewhere fast and the gas is getting higher or something, they're trying to basically communicate that because they don't want to have to raise capital again because the market is not favoring good conditions for raising capital at a $28 share price or whatever. Last time they raised stock, it was like $150 share price. January 2021, they were so opportunistic to
yeah
get at that. So because they don't want to have to raise capital at like a valuation that's like 1/5 or less of what they did last time, they decided to change their trajectory of growth to keep costs in control so that they think they can get to profitability without having to raise capital. And in order to do that, they can't grow as fast going forward.
yeah
They're sort of saying, they're sort of communicating. So that means like next quarter, maybe the losses are greater, but maybe the growth doesn't look good for a quarter to quarter, and people get disappointed and the stock comes right back down, or shorts get wind of this ahead of time, start shorting it again, or, so we don't know. Like it's a long-term game, but this was a good, a good beacon in the right direction, a good beacon
yeah
of light in the right direction for the bull case for Lemonade in the long term, and that's why we're excited. And the stock is reflecting that to some degree here.
yeah Yeah, absolutely. I mean, they did. I was, no surprise in Excel today, updating my Lemonade model, and with all the changes, it did kind of push back the year when they flipped to profitability in my model. So,
Yeah,
there's you could certainly take it as bad news, but they did say if their cost of capital comes down, then they'll change plans and accelerate growth again. So
yeah,
hopefully that happens. But even in the scenario where it is just kind of a longer road to profitability, but they do it like in a more kind of measured clip, and the losses aren't so steep along the way. We could see the stock rally in that environment as well. It's just kind of the course becomes very clear of what they need to do to get there. I think
yeah,
there's still a lot of skepticism. I mean, when you've got a adjusted EBITDA loss that's higher than your revenue, I think there's rightly some skeptics out there that say this will never work, but
Yeah.
you've got to not look in the rear view mirror and looking out the windshield. I think is very, very exciting if they can pull it off. Which, to be clear, is still like there's still a probability that they fail, but I think the
Yes.
probability that they succeed is increasing given this report.
Yeah. And for anyone who doesn't follow Paper Bag Investor, if you're interested in Lemonade, he's like a great follow. He has a model. He puts out interesting ideas, like some wild card moonshot ideas for Lemonade is for them to like partner with Apple for health insurance, using their technology for Apple to help apply for health. I mean, that's the long shot, but it's possible. You could see that. But a more possible thing he speculated on recently is like Cash App partnering with Lemonade to offer insurance to everyone using the Cash App. So that's more, to me, that seems like more potentially likely. And if something like that, some partnership like that happened with Lemonade, that would be really good news. I think the stock would react very favorably as well. So there's a lot of possibilities with Lemonade in terms of like these unexpected catalysts that could happen as well. Doesn't mean they will happen, but you just never know. Yeah.
And then we got Roblox tomorrow, so we're
Roblox
gonna be,
tomorrow.
busy.
Where's Roblox today? Is Roblox today?
I think the call's tomorrow. Maybe it's released
the
today.
call. Yeah, the earnings report is tonight. It's sort of like Lemonade. I didn't get a chance to listen to the Lemonade earnings call this morning, but I saw a lot of questions I wanted to listen to. But yeah, the earnings report for Roblox is tonight, and then earnings call is probably tomorrow morning again as well, similar to Lemonade. So Rocket Lab later in the week, right? And then our favorite company of all, Rivian, they report later in the week. So we're going to see what Rivian has to bring to the table with their earnings or losses. I'm curious. Yeah. So.
What was your quote the other week? We really like the anti-long thesis on Rivian or something like that.
No, and that was GM. That was GM.
That was GM. You're right.
Yeah, but that sort of applies to Rivian as well. Yeah. So
yeah, I hope Rivian can get their gross margin up to like negative 400%. That'd be a good move in the right direction.
Yeah. Oh my gosh. So
the cash burn should be phenomenal.
Yeah. Let's. I see Tesla Economics, one of our favorite followers or people to communicate. Maybe we can get him on here one day. Who knows? But he said, I saw him say earlier that he says Elon, he believes Elon when he said he's done selling Tesla stock for Twitter. And Elon said, I think to quote him, there's no more planned, quote unquote, planned sales of Twitter. So that was just to cover, it means like there could still be a sale of Twitter, but he hasn't planned it yet. So I hope he's not. I mean, I hope he never has to sell any Twitter stock again. But if he does, I hope it was Friday and yesterday. So instead of in the future. Yeah, Tesla stock. Yeah. So we'll see. Why don't we go to Q&A? We usually go to Q&A early. Is there anything else you want to touch base on about Lemonade or anything, Matt? Before
yeah, we've gone a bit longer than usual. So why don't we switch gears into Q&A?
Yeah. And someone had a nickname for Matt earlier in the beginning. I liked the new nickname. Did you see that, Matt? What they called you?
No, what was that? I'm nervous.
They called you Minecraft Matt. I like it because your background. If anyone, I know most people are on YouTube, but there's a few people on Twitter Spaces. But on YouTube, you could see Matt's background. He's got a new wallpaper. And a couple weeks ago, I told him it looks like you're in Minecraft, and so I think it's sticking because his wallpaper looks like those blocks in Minecraft right behind him. So interesting.
I could probably climb into one of them. No, I've never played Minecraft actually. So
okay, I've only watched
my kids enough videos though. I kind of get how it goes.
I've seen a lot of YouTube videos of people playing Minecraft in the last few years. My kids, it's all they watch. All right, first question from Holder Danks 9 on Twitter. Do you have concerns about Lemonade slowing customer growth? Yeah, we sort of referred to that at the end. Like they're sort of signaling to us that they're going to slow their customer growth. They're not going to spend so much money to acquire new customers, it sounds like, because they want to keep their costs under control so that they can reach profitability before having to raise capital again. So this is a concern. And it's the major concern in my mind of how the market might interpret Lemonade as whether it's not a growth stock or not. Like, Lemonade's growth is slowing down, even though their costs are getting controlled. There's clearly not a growth stock anymore. That might be but also maybe what would be great is if they're upselling and cross-selling of existing customers to car insurance and other products. Maybe the in-force premium just increased, even though their customer acquisition growth might be slowing down. Maybe their in-force premium growth is still going to accelerate or grow at a similar pace to what it has been. So that could be a nice thing to keep an eye on. Any thoughts by you, Matt?
Yeah, I mean, we did kind of touch on it. I mean, the big concern is that it kind of pushes the year for profitability out. So you've got lower cumulative losses along the way, which maybe that's a good thing for the share price. I think it definitely is a good thing for the business that they're making this change. But one of the things we've spoken a lot about it, at least internally, is the potential for some lemonade leaps to really pay off in like 2024 or something like that. I think the kind of massive upside by 2024 is maybe diminished a little bit with this change of strategy, because it's much less likely that they're going to turn a profit by then. So you're kind of pushing out the year where maybe there's this crazy rally once they turn profitable and people realize just how profitable they can become. I think the year for that potentially occurring has been pushed back a little bit. So I mean that's more of a concern about like opportunity cost for some investments that we feel could have paid off really well, but that we haven't even made yet. So it's not really a concern. And I think from the overall business standpoint, it's definitely a good thing.
Yeah. Next question from Evan Glansman. How you doing, Evan? Question: Tesla's earnings could really get kind of nutty towards the end of this year and especially next year. What kind of PE would you expect Wall Street to assign to the stock at that point? I don't know if Wall Street's going to assign a PE. I guess the way to think of it is like what coincidentally will become the forward PE or PE of Tesla as it's going to more wide release of full self-driving. I mean, I think the wide release of full self-driving will be nice for the earnings, but it gets really nutty when they set up a robotaxi network. Just having more people adopt an extra $12,000 or $15,000 option on the Tesla is really nice. Don't get me wrong, that's great. It's pure margins, but the real nutty margins, and I think, and Matt, maybe I'm wrong, but I think from your modeling analysis, the real nutty margins happen when there's actual robotaxi network being employed. Is that what you think too, sort of?
Yeah, I mean, the whole thing is kind of nutty though. Like I never ever expected their manufacturing margins and profitability to be this good. So the thing that I find so crazy, again, not investment advice, but using what I think is like a conservative PE of 50 for next year, and not assuming big increases in take rate for FSD, let alone like Tesla network, there's still a pretty sizable amount of share price appreciation that implies. So that means if my view of the world is right, that there's huge upside potential if the PE is higher, or if FSD take rate goes up, or if the market is, especially if as you were saying, Emmet, the market starts giving credit for autonomy for like the Tesla network. So the fact that you've got like pretty massive appreciation on what I would say is like the most conservative, like reasonably low multiples and low earnings next year for the bear case, to me that gives me some comfort in knowing even in a worst case scenario things aren't going to be too bad. Maybe that's not the worst case scenario, but a reasonably bad outcome. The share price is still has a good amount of support, and then there's just like crazy multi-x potential from that already high level. So yeah, that's like the nutty things. I think for sure 2023 is going to be nutty, even more so in 2024. And like that, it's so hard to even look past then, because it's like, are you going to add 3 million robo taxis like in 2025?
Yeah.
And like the numbers just truly do get insane.
They do.
So you can't model that as your base case, but it's very fun to actually look into it and see what the implications are.
Yeah. Next question from Farzad. How you doing, Farzad? Good seeing you at the Clive Bar, at the annual meeting gathering. When is Lemonade expecting to get into auto, home, life, health, etc.? That's a great question. I mean, auto, they just completed the Metro Mile acquisition, and I think that was a question that was asked of them on the earnings call this morning, and they sort of commented on in the shareholder letter. I'm going to listen to the earnings call later, but in the shareholder letter, I think they're working on it. They want to use the Lemonade car insurance, not the Metro Mile car insurance software or app or whatever. So they're just working on transferring Metro Mile customers onto the Lemonade stuff. And I think life insurance they already offer, health insurance maybe one day, home they already offer. What did you take? What did you have? what was your takeaway on the auto insurance timing? Have you listened to the call yet, or we'll listen to it later probably?
Yeah, I mean, they said they're going to be pretty measured in the way that they roll that out. So I think that
Mhm.
was kind of to the point earlier about slowing growth down. The loss ratio on the existing Metro Mile book is higher than the rest of the business. I think they said it'll add about 5 points to the loss ratio overall, even though that's only about 20% of the in-force premium. So that if that kind of tells me that their loss ratio is over 100%, most likely. So if that's the case, then yeah, it does make sense to kind of figure out the loss ratio bit first before
Yeah.
you go too crazy on
Yeah.
expanding that out. So, but I think they will figure that out. I think they've got a pretty unique AI capability that Metro Mile didn't necessarily have. Metro Mile had the data, but it was very clear they weren't using it, to the fullest potential,
Yeah.
given how high their loss ratios are. So I think they'll take some time, work that out, and then kind of slowly roll it out to some other states. So that was again part of the reason that I'm slowing down the growth of in-force premium per customer, because I think that integration and especially that cross-selling opportunity is going to be a little bit more measured than maybe I was initially expecting. So that's maybe
Yeah.
the downside of that.
Yeah, their internal like AI machine learning, they call it like LTV6. I guess they were on like LTV5 or 4 recently. They moved it up to the next version. They gave a lot of insight on that in their shareholder letter. They went over like a few pages of explaining, some examples of how it works. To LTV means like lifetime value. They try to calculate the lifetime value of each customer early on with all these points of data they take in, and they feel confident in their accuracy. They're feeling more confident in their accuracy of predicting that. That's one thing I'm skeptical of. I'm still bullish on the stock, but I'm skeptical of that. I mean, if that was true, if what they're doing, what they're building is true and actually works with the veracity that they think it does, then that's a really good sign in my mind. I'm just very skeptical that this like machine learning LTV6 or LTV7, whatever they build, is going to be like some secret sauce that helps them predict, more accurately every customer. I don't know. I mean, maybe it helps them a little bit, but I don't know if it helps them as much as they think it does. I think there's a lot of outside factors that might not be able to be predicted by that, whether it's like a next freeze in Texas that affects everyone differently or whatever it is. I'm just skeptical of it, but I'm glad they're working on those projects. I hope I'm wrong. I hope it works to as they think it will, because if it does, then there's a real huge, bigger recipe for success in Lemonade's future, margin earnings and such. So.
Yeah, I completely agree with you. Like I don't want to give them credit for that right now, but they
Yeah.
shared something about like their historic loss ratios by iteration of that AI, and it was something like like 88 down to, or I think it was higher than that, down to I think currently they're at 88. But I think they said that their expected lifetime loss ratio was like 68% on this LTV6. Now that's like, well, of course you're going to like it's kind of like backtesting a financial model, right? Like
Yeah.
if you build like a stock picking model or something like that based on what's happened historically, then you can say, oh, look how great we are.
Yeah.
The truth will ultimately, or the proof will ultimately be in the pudding of over the
Yeah.
next several years. Do we actually see that loss ratio come down, and does that LTV6 cohort is it truly tracking to that roughly 68%? And if it is, like if a year from now they
Yeah.
can come out and say, hey, we're actually tracking right to that 68% we thought we would be, which is better than industry average, then like
That'd be
holy cow,
great.
like that's
Yeah.
huge.
Yeah.
But it was
Yeah. It
impressive. Like they
reminds
said
me
there were
of,
like a million parameters that they were looking
yeah.
at.
I hope it works, but it reminds me a lot of, like you were saying, like in finance, the past performance does not predict future returns or whatever. Like there's that saying that you have to say. Well, when I was in sales and I had some of the smartest computer scientists, engineers, rocket scientists, people like with IQs of like 200, like super smart people, like coming to open up an account with Interactive Brokers for their hedge fund they're starting up with this brilliant idea they have. They feel like they've got it solved. They've backtoasted with a million data points like that. I have the LTV version infinity to predict how the market's going to react in microseconds of different scenarios. It's going to print money. And it never worked. It never worked. I mean, I don't know if the stock market is the same. The randomness of the stock market is obviously different than the randomness of insurance, but made me skeptical of those types of claims, and that's why I'm just skeptical of the Lemonade claims on that. But that doesn't mean they could really believe that. I don't think it means the company is going to do or die based on the success of that in any way. I think I think you just have to take that with a grain of salt. It's a huge upside call
Yeah.
option if it works out. Yeah.
Yeah, that's exactly right. And if anyone is not familiar with the history of long-term capital management, that's a great kind of historical finance, episode to look into for all the reasons you were just saying, Emmett, about like the smartest guys in the room with like the most money that built this model that couldn't lose, and then like Russia defaulted on their debts, and like the whole thing blew up and almost took down the financial system. Like, and these like Nobel laureates that were in charge of this hedge fund, and just like I think a crazy capital incinerator. So yeah,
Oh my
it's
gosh.
it's prudent to be skeptical at this point. We're not
Yeah.
gonna give any company that we're invested in, Tesla included, the benefit of 100% of like whatever the CEO says.
Yeah.
We'll just model that into our base case. That's just
No,
not how we
it's not.
operate.
It's not. No. All right. Let's go to the next question here from Enrique Moctezuma on YouTube. Why do you think ARK ignores Rocket Lab and Roblox, two great players in their fields? I think ARK does invest in Roblox.
Yeah, I think they do. Yep.
Yeah, but they ignore. Maybe you meant Rocket Lab and Lemonade. They do ignore Rocket Lab and Lemonade. I think in the past there was like a comment someone from ARK made about Lemonade. They looked at it, but they didn't look into it too deeply or something. I forget, but maybe they just haven't studied. And Rocket Lab, yeah, I don't know. They've commented. I think Sam Kors has commented once or twice on Rocket Lab, but yeah, they don't invest. They had that space ETF. They never bought Rocket Lab yet. I think inevitably they will at some point. If I think everyone who wants a part of the space industry inevitably will invest some amount of Rocket Lab, but it's just a matter of how many people want to invest in the space industry, and if you want to do it through public markets, I think inevitably Rocket Lab is the top spot to do it with,
Yeah, the Rocket Lab one does bother me a bit because they have a space ETF, and like Rocket Lab
Yeah.
is like by pretty much any metric the very clear number two in the launch industry, and a huge amount of components provided to the space industry. So the fact that they don't have that in their fund, while they do have like Netflix and John Deere, who like can in no way be called pure play space companies, to me that's not right. But I tried to ask them a couple times. I've just never had a response.
Yeah. I mean, ARK, I really think they're a great shop. Like, I think they were an all-star team. I've said many times, Kathy Wood, Brent Winton, back when James Wang was there, Sam Kors, Tasha Keeney. You had like this incredible all-star group of analysts early on. And then they got so successful, and the market favored them as well. It was like a perfect storm for them to grow, which they rightly should have, but they had to hire a whole bunch of analysts and get into crypto, and they went pretty heavy in crypto, I feel like, and maybe too heavy on some of that stuff. But I feel like a lot of their analysts, younger analysts they hire, they're good people, but they're not the all-star team. They're just kind of like these, they're not it's not the same. They were diluted a bit, and they have so many different stocks. It's hard for like the core analysts there, whether it's Brett and Kath and Tasha and Sam, to keep track of all 100 stocks across all their ETFs. Each of those guys probably understand Tesla and like a few other stocks very closely, but they can't keep track of all the stocks just like Matt and I, we run out of bandwidth after like 4 or 5 or 6 stocks. We can maybe 10 stocks we could be stretched to if we had to, but much more than that, we'd be doing a disservice to ourselves and our investors trying to keep up with too many stocks. So anyway, they're a good shop. I'm glad they open sourced their research. I have a lot of positive praise for ARK and what they've done. Let's go to the next question here. From Ishan Patel, is there any plan for Matt to discuss his model on Lemonade? So Matt, you do have a model, I believe, for Lemonade. I know people have been asking about it. We haven't, I don't think, publicly revealed. Paper Bag Investor openly revealed his model not long ago for Lemonade, and I know you've looked at it, Matt, and had some interesting feedback about it. What about your model? Have you any interest on maybe our channel is mostly Tesla. People mostly like Tesla, but there is a growing interest in Lemonade. Maybe if Lemonade starts, growing further and there's more interest in it, we can go through it or something on here at some point. What do you think?
Yeah, we could do that. I mean, I think maybe one of the bigger differences is like the Tesla model has proven to be incredibly accurate over time, but Lemonade's business much that like I think I still have been more accurate than Wall Street on this one. But like even today, I just went back and updated, and like the year for profitability flipped by about 18 months. So anytime that if we were to do a deep dive on the Lemonade model right now, it would just be it'd be a point in time view on what we think Lemonade could look like down the road. So yeah, I mean, I'd be happy to do that. I suspect there'd be a smaller audience for it, but yeah, we could certainly do it. But I think it's going to change quite a bit as the actual results come in over the next, say 12 months in particular. And we'll have a better feel for what the long-term kind of sustainable numbers are for some of these line items.
Yeah.
But
all right, let's do we're close to the hour. We usually try to keep this. Let's do one more question. This one's from Talks with Andy on YouTube. How much of a drop in inflation do you think is already priced in regarding tomorrow's print, considering the rally we've been on? That's the $1 trillion market cap question to the market right now, is how much is priced in? I'm seeing signal on my Twitter from my curated feed that I think gives me signal to some degree on the macro markets. Probably not nearly as much as I need to make decisions, but it seems like a lot of the institutions, especially like the speculative hedge funds, are not convinced that we're out of the bear market and have kind of been caught by surprise by the recent rally. If that's the case, I think that's good news that there's more people left to kind of more bears left to close their shorts or to get back in the market because they're kind of waiting on the sidelines. So I'm hoping that it's not really priced in yet, and maybe just marginally priced in. And that was the initial move up the last couple of weeks. So yeah, tomorrow anything can go with terms of the market reaction. It could go up or down 5%. It could go up 5%, then down 8%. I don't know. It could go crazy tomorrow. We just don't know. It's a big CPI print. It's a big inflection point in the CPI. It's a big turning potentially of the tide on sentiment overall. But then people are still hesitant because of the Fed, being so, prudent on their language more recently. Although Powell seemed to open the door in the last meeting that like maybe we aren't going to be as aggressive in rates, going forward. So it's confusing. The language from the Fed has been, contradictory sometimes, but the data points is what I think they'll really follow. So if the CPI tomorrow, I think the market will come to the realization, whether it takes a few days or a week or something, I think it would come to the realization that like, hey, let's invest back in the markets. These high interest rates aren't going to last that long with inflation slowing down. And then the CPI print for the next month, the CPI for August, when that gets printed like the first week or second week of September, that'll be another big, reconfirming print if it's also 0.2% or 0.1% month over month, or maybe it's negative. It'd be great if they're both negative. Then it'd be like deflation, everyone cut interest rates. The market would just rip. I feel like it would be incredible. So that's possible. I mean, we're talking about 0.1 or 0.2% different adjustments from the estimates, right? I mean, not long. Like,
remember how big
5%, they'd be like, or it'd be like 3%, it would be like 3.4% in reality. So like a 0.2% difference in estimates is not out of the question.
Yeah, well, I think especially since June surprised so much to the high side that, I think especially sequentially, that seems like make it more likely, or at least that there's a greater chance that it could be a negative print. And like the GDP surprise, I mean, that was a massive miss on GDP estimates in Q2. And so these estimates are not like they've proven pretty inaccurate on some of these important macro things lately. So it's certainly possible that you could have, a big miss to the downside. And if that happens, yeah, I think markets would rip. But again, our expertise is not on macro here. So we're trying to be kind of tempered in our expectations and really just focus on, companies and long-term fundamentals and, make sure we're not just ignoring macro completely.
Yeah. Yeah. I mean, I feel like the best people on macro to listen to are the people that always present two cases like, well, the market could go down, could also go, but it could also go up, like that's basically what we do. I mean, you have to think of both options. You can't be, if you start thinking the macro is going to go one way or the other, then I think you're just flipping a coin and you're going to lose after a few times. I don't know. It's just, it's so hard, the macro market. short term to see what's happening. I think medium to long term, end of the year goes well for macro markets now until the end of the year, but the next few weeks or even the next month or two, I don't know for sure. It's very short, hard to predict. So
Yeah, yeah, and then there's political risk too. I mean, I think we spend so much time talking about the Fed, but if China does something crazy in Taiwan, which tensions are
yeah,
certainly high right now, I mean that could be bad.
yeah,
This war in Ukraine is still dragging on, and there's other kind of political risks going on throughout the world right now. So certainly
absolutely.
hoping that things settle down there, but it may be a bit of a tightrope walk to have inflation come down, have the Fed lower rates, and have like all these geopolitical tensions, like nothing break. In that case, certainly I think
Yeah.
we'd be ripping in the second half of the year. But I just don't know how much of a tightrope walk it is to kind of hope that all of those things go the way that you might want them to. So
Yeah, absolutely.
on that happy
All right. Well,
note,
great chat. Hopefully a week from now. Yeah. Hopefully a week from now, we'll be, discussing new highs and lots of stocks, Lemonade, Tesla, Roblox, Rocket Lab. Who knows? Not new highs, but new, hopefully they'll all be up from where they are now, but could also be down. So go either way. Anyway, good chatting, everyone. And we'll see you for episode number 59 next week. Cool.
ooh, all right, 10 away from
All right.
69.
Yeah.
All right.
All right, guys.